Okay, see now company final accounts now. So under the company final accounts, we have two proformas now. What's that? One is profit and loss account, and second one is debentures. Okay, so we discussed about this some subsidiary books. Okay, now see the balance sheet now. Okay, depend upon this proforma, we will do the problems relating to this. Okay, so in that before classes we know the what are the types of books of accounts. Okay, what are that? Cash book, purchase book, sales book, sales returns book. Okay, purchase returns book, sales returns book, bills receivable book, bills payable book, general purpose. So all these books we have to record only the credit transaction. Already we know the meaning of credit transaction and cash transaction. Now see here, it is important. Okay, definitely this proforma will come for 12 marks. Okay, depending upon this proforma we will do the problems. So this proforma is as per the schedule of 3 under this Companies Act 1956. Okay. So balance sheet. Okay. So under this balance sheet, some company name will be there now. So name of the company. Name of the company. As on means here at the end of the year. Suppose here I will take 31st March 2005. Okay. So name of the company as on 31st March 2005. So in the before partnership accounts we will prepare balance sheet at the horizontal. Okay, horizontal means what? Liabilities, amount, assets, amount. But under this company accounts we will prepare balance sheet under this vertical proforma. Same liabilities, amount, assets, amount, but we will prepare vertically. Okay, so under this first is so on the main head is what? Particulars, particulars, amount. So first, so in the horizontal form what we do, we that is in the form of an T shape now. So on that left hand side we will prepare liabilities amount, on the right hand side we will prepare assets amount. But here first we will take the liabilities, after that we will take the asset. Okay, so first is equity. Main heading is what under this? Equity, equity and liabilities. So under this equities means what? Capital na? So first capital. So under this liabilities it will be divided into two types. What are that is? One is long term liabilities or non current liabilities, or and short term liabilities and current liabilities. Okay, so first share in that company shareholders will be there now. So first one is what? Shareholders funds. Shareholders funds. Okay, very important this proforma. You learn this proforma, automatically you will get 12 marks. Okay, so under this shareholders funds, what will be there? First is share capital. Okay, share capital amount. Next, reserves and surplus. Reserves means what? Appropriation of profits now. So every year, at the end of the year, profits will getting some now. So under these profits, the company will keep certain percentage of amount of that profits is keep aside. So these reserves, when it will be used, suppose any companies goes into losses or any urgent need of capital, so at that time the company will use this reserves and surplus. Next is money. Money received against share warrants. Okay, money received against. So share warrants means what? Any shares or any preference shares will be there now. That shares will be converted into equity shares. So I will explain already what are the equity shares, what are the preference shares. Okay, what is the meaning of the preference dividend now. So all these, so under this, any preference shares or any, it will be shares will be there. That shares will be converted into the equity shares. So against that money is received. Okay, next second one is share application money. Share application money pending allotment. So next is non-current liabilities. Okay, so non-current liabilities are any debentures or any long-term borrowings. Okay, other long-term provisions will be there. So all that come under this non-current liabilities. Okay, next is current liabilities. So under this current liabilities, any short-term borrowings, bills payables, trade payables. Okay, so these will be come under this what? Current liabilities. Okay, provision for taxation or any proposed dividends, corporate dividend tax. Okay, sundry creditors, bills payable. Okay, any accrued or any outstanding borrowings or income received in advance. Okay, bank overdraft advances received from the customers. Okay, any outstanding expenses that will be all under come under this current liabilities. Okay, so after completing this all liabilities, make total. Okay, we will do the totals of these liabilities. Okay, so liabilities will be completed. Then next what will be prepared? We will prepare the assets. Okay, okay, so under these assets we have two types of assets now. One is non-current assets and second one is current assets. Current assets means what? Any asset which will be or any cash. So so under this current assets, we will be converted into cash within a period of 1 year is known as this current assets, like any current investments, trade receivables, cash, short term loans. Okay, so all under this current assets. Next, under non current assets means fixed assets. So these fixed assets which cannot be converted into period of 1 year. So we construct the building that it will be cancel that all that building within a period of 1 year. No, that building is used for a several years like 20 years or 15 years, or any missionaries, okay, or any furniture. So that all under this come under this non-current assets. Okay, so first is non-current assets. Under these non-current assets, okay, first fixed assets. Okay, so these fixed assets divided into two types. What are that? One is tangible assets and second one is intangible assets. Okay, then what is the meaning of these tangible assets? Tangible assets means what? We can see, okay, we can touch and feel. Okay, so that all under this come under this tangible assets. Okay, the assets which can be see, touch and feel. Okay, next is intangible assets. What are the examples of the tangible assets? Land, buildings, equipments, furniture, fixtures, vehicles, office expenses. Okay, what we can see that are come under this tangible assets, under this fixed assets, like land, buildings, plant and equipments, furniture, vehicles, office equipments. Next is tangible assets amount. Next is intangible assets. Okay, what is the meaning of the intangible assets? Okay, intangible assets means what? Which we cannot see, we cannot touch and feel. Okay, what are that examples of these intangible assets? Okay, is goodwill, okay, computer softwares, copyrights, patents, okay, any intellectual properties that will come under this intangible assets. Okay, next is non-current investments. Non-current investments, any deferred tax assets. Okay, deferred tax assets. Next is any long term loans and advances. Long term loans and advances. Okay, so or any will be there. So other non current assets. Okay, now don't confusing. Okay, while doing the problem I will explain each and everything that time also. Okay, other non current assets. So these are what are non-current assets. The next is what are current assets. What are the current assets? Okay. Okay. The next is current assets. So what are the current assets? See here. Current assets. So under current assets, what are the items will be appear is, so one first one is current investments. The next one is inventories. Next, trade receivables. Trade receivables. Next is cash and other cash relating to the transactions. Okay, cash and cash equivalents. Next is short term loans and advances. Short term loans and advances. Next is other current assets. Okay. Okay. So these are the some items will be appear in the current asset. So after completing these assets, okay, we will do the total. Okay. Now close the balance sheet. Okay. So in that balance sheet, when it will be the correct, if you tally the liabilities amount and assets amount will be equal, then only your balance sheet is correct. Okay, otherwise wrong. Okay, so don't confusing. Okay, you know all the what are the assets, what are the liabilities, which will be come under this any liabilities or any asset side. You know all of this. So under this, first you will calculate the all liabilities, it will be total. Next, after that completing the liabilities, next you will do the asset side. Okay. Okay, next directly we will go with the profit and loss account pro forma. So after these two pro formas will be completed, directly we will go to the problems. So why I will explain this profit and loss account is in your problems. Okay, they ask both. Okay, they will ask both that what's that you will prepare profit and loss account and balance sheet. So that's why continuously I am explaining the profit and loss account pro forma. Okay, remember these proformas. Okay. form of form of statement statement of profit and loss. For what purpose we have to prepare this profit and loss account? Okay. Now we will preparing this profit and loss account. Now for what purpose? What is the use of this preparing this profit and loss account? To know the net profit, not gross profit. Okay, so first we find out the gross profit. So under that gross profit we will deduct some expenditures and we will add it some income. So after while deducting these expenditures and losses and incomes and gains, okay, at the end how much is a profit is remaining. Okay, is getting any net profit or is getting any net loss. For this purpose we have to prepare this profit and loss account. Okay, name of the company, name of the company for the year ended. Okay, name of the company for the year ended. Particulars, particulars amount. Okay, so first, so in your first year also it is company balance sheet now. So as well as normal profit and loss account, how it will be there. So generally account is in the form of an a T shape now. So that left hand side is known as an a debit side and that right hand side is known as an a credit side. So at that time how you get the profits? Your credit side is more, debit side is less, then that time you will get profits. How it is means income is more, expenditures is less, then you will get the net profit. Or else suppose expenditure is more, income are less, then that time you will get the net loss. Okay, but under this first we will take the incomes and gains. Under this we will deduct the expenses. Okay, so first we what items will be taken? First we will take the revenues or any incomes and any gains. Under this we will, after this we will take the what are the expenditures, what are the losses. Okay, then we get this profit. Okay, revenue from operations, okay, what are the transactions, what are the items will be come under this revenue from operations is sales and gross profit. Okay, the two items will be come under here. What are that? Sales and gross profit. The next one is other income. Okay, then what are the various items will be come under is okay, any interest and dividends. Okay, any amount you will give some amount of money to your friend in the form of a loan. So on that what you receive some interest, so that interest is known what income to yours now. Okay, interest and dividends. Okay, net gain or loss from sale of investments, commission received. Okay, commission received, discount received. So that all under come under this other income. So these two come under this incomes and gains. Okay, next is total revenues. Or else you will take, okay, this is first, this is second. When you add these first and second, you will get this total revenues. Okay, so after this you will deduct some expenses. Okay, so this total revenue is taken as an a 3. Next 4 is taken as a several expenses. See here what are the items will come here. Cost of materials consumed, cost of materials consumed, next is purchase of stock in trade. Okay, next is changes in inventories. Okay, changes in inventories. Okay, so that inventories of finished goods. Okay, so in the problem directly it will be given. Okay, finished goods, work in progress. Okay, work in progress. Next is stock in trade. Okay, stock in trade. So any of the it will be given, you have to write under this expenses. Okay, so add some amount. Next is employee benefit expenses. Next is what? Employee benefit expenses. So under these employees benefit expenses is any salaries, okay, any labor's wages, okay, salaries and wages. Under this salaries and wages, or any staff welfare expenses, or any contribution to pf means what? Provident fund or stock option expenses, that will come under this employee benefit expenses. The next is finance costs. The next is finance cost. Under this finance cost is expenses. Na? So interest on debentures. When a company borrow from the public, so that is one type of an debenture. Na? So at that time the company will pay some interest. Na? So that's publics to the income. While coming relating to the company, it is expenditure. Na? So that expenditure will come under this finance cost. Okay, interest on debentures, interest on loans or any overdraft other borrowing cost. Okay, that is finance cost. Then next is some other expenses. Okay, so under other expenses is like other expenses is what, any rent and repairs, rates and taxes, insurance. Okay, selling and distributions or any bad debts, directors fees. Okay, next some other managers, directors remuneration, consumption of stores, pays, any payment to the auditors. Okay, some these are the some other expenses come under this expenses. Okay, okay, so after this add total expenses. Okay, these are the total expenses. Now profit. So profit means what? The total revenues minus total expenses. We will get some profit. Okay. So this is fifth. Na? So profit before exceptional and extraordinary items. Extraordinary items and taxes is that is 3 and 4. Okay, so 3 minus 4 we will get some profit. Okay, 3 minus 4 we will get some profit. Okay, so under this we deduct some exceptional items. Okay, deduct some extraordinary items. The next is exceptional items. So I will explain this exceptional items. So some amount here. The next is you will write the proforma in this way only. Okay. Profit before extraordinary items and tax. Okay, that is 5 minus 6. Okay. The next is next is first we deduct some exceptional items. After next is we deduct the extraordinary items. Next we will deduct this tax. Okay, so first is completed. Now what item we will deduct it now? Extraordinary items. Next is ninth one, what we get? Profit before tax. These profits will come under before tax. Is these 7 minus 8. Okay, so this profit before tax now. So under this before tax now, so that's why we will deduct that tax. Okay, after getting the profit. Okay, next, tax expenses. Okay, so under these tax expenses, we will two types of these tax expenses. Okay, one is current tax. Okay, one is current tax. Second one is what? Current tax. And second one is what? Deferred tax. Okay, under this profit before tax now. So under this we will deduct that tax expenses. Okay, so after getting what? Profits after tax. Profit after tax is profit before tax minus is tax expenses na. Okay, this is the profit way. Okay, so first see here. Okay, this is profit and loss account proforma. First you will take the revenues, incomes. Okay, so first you have to write the revenues from operation. The next one is you have to write the other income. So under this other income, any commission received or any interest and dividends or any sale of assets. Okay, so add these two. Okay, 1 and 2, you will get the total revenues. So after total revenues we deduct some expenses. So what are the expenses? So these are all directly given in the problem. Okay, you have to keep with in this in this heading is expenses. Okay, see here what are the expenses? Cost of materials consumed, purchase of stock in trade, changes in inventories like finished goods, work in progress, or any stock will be there. Okay, that will be right here. Next, employee benefit expenses. The next is finance cost. Next is other expenses. So add all these expenses. Okay. Next step is what we want to find the profit. Okay, profit before exceptional and extraordinary items and tax. Okay, so total revenues minus total expenses, we will get some profit. Under this, first some before this profit now, so all these three are we deducted line by line. Okay, first we deducted exemptional items. What we get this profit before extraordinary items and tax. Next we deduct this extraordinary items. Okay, what we'll get? We will get the profit before tax. So under this we will deduct this tax expenses. Okay, so in your problems the tax expenditure will be given some percentages. Okay, 50% of the some amount will be given. Okay, we will calculate that 50% and right here. Okay, so after getting this, after deducting these tax expenses, what we get the profit after tax. Okay, this is our two pro formas. One is balance sheet and one is profit and loss account. Okay, please go through this and remember these two pro formas. Okay, this is our today's class.